Welcome to our channel, and more importantly, welcome to the third episode in our Learn to Trade series. In this episode, we will be learning how to identify key price levels in a trading chart. In other words, we will be looking to identify key supply and demand zones as well as support and resistance levels. Stick around to the end of this video, and also remember to drop a thumbs up on the video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. Now, the first thing to understand is the fact that key levels are prices or values where there are usually a major shift in momentum of price. For example, let's take a look at Boeing, ticker symbol BA on the New York Stock Exchange. On the weekly chart, we can clearly see that there are levels where there are major momentum shifts in price. So for example, around the $100 level here, we can see that price clearly had a huge rejection off of this level. We can also identify this level here around the $29 level where price clearly also had multiple reactions off of this level. Additionally, we can also identify this level right here around the $120 level because we had multiple reactions off of this level. And additionally, we can also highlight this level around the $320 level where price did have multiple reactions off as well. So these are our key levels on the weekly chart that we know price should typically respect. And as you can see, we had massive reactions and shifts in price at these levels. Now, price typically reacts to these levels for one primary reason, and that reason is the fact that there are a large amount of buy orders underneath this level and at this level. And conversely, at these all-time highs, which actually is another major level, there are a lot of sell orders. So if we know that there are tons of sell orders here, we know that price will have quite a hard time breaking above this level. And if we also know that there are a lot of buy orders located in this area, then this is quite a safe area to place a buy trade if price reaches this zone, just because we know how much it's been respected in the past. And that brings me to our next point, which is the fact that previous price action will show us the way into future price action. So the fact that this level here around the $120 level was established since around the beginning of 2014, even when we had the crisis back in March and the Boeing stock price fell catastrophically, we can see that we clearly had major reactions at this level because we knew from previous price action that there are an extreme amount of buy orders in this area between $100 and $120. And because there were so many buy orders in this level, despite the massive change in fundamentals such as the lockdown and so on and so forth, this level of price was respected and we got quite a convincing bounce off of this zone as we now trade at almost double that $120 price, up at around $220. So now that we've established that this is our key level, as you can see that there are points where price does crash below this $120 level, even below the $100 level on these two occasions. So even though price did ultimately respect this $120 level, we did get instances where price overshot this level. So this is where the concept of supply and demand zones come in. The truth of the matter is that price will not necessarily respect one specific price, but rather price respects a range of values. So what I'm going to do here is clear up this chart, and rather than draw in support and resistance levels, I'm going to be drawing in the corresponding supply and demand zones to these levels. So the way that I draw my supply and demand zone is that I take these levels where these massive reactions have taken place and I use them as my minimum and maximum levels. So for example, my supply and demand zone will lie between $100 and around $120. So essentially within this zone, if price is trading within this zone, then this lets me know that we could have a major reversal take place. And as you can see, based upon price action, we did have this massive reaction off of this zone here once again, and here once again, just like we highlighted between our two levels. But rather than having two levels, now we have one zone that's about $15 wide, and we know that there are a concentration of buy orders in this area. So it's definitely a lot easier to look at these areas as zones rather than just specific levels. So if I zoom into this chart a little bit more, what you will see ultimately is the fact that even during this crash, price fell all the way down below the $100 level, but the candlestick did not close below this level. So you can see that I'm using Heikin-Ashi candlesticks to represent price, and that's just because it paints a much clearer picture in terms of what's happening holistically in terms of price moving either upwards or downwards, and it blurs out a lot of the noise that we typically get when it comes to traditional candlesticks. So for example, the way I drew my supply and demand zone with Heikin-Ashi candles, you can see that down here there was actually a clear break of this zone if we were looking at it in terms of traditional Japanese candlesticks, but then price immediately shot back above it. So in order to blur out a lot of this noise, I prefer to analyze my charts using Heikin-Ashi candles because it shows me that price clearly just had a massive reaction off of this level. Now if the Heikin-Ashi candle broke below this level, that would mean something completely different, and you will see this as I go through a lot more examples what constitutes as an actual break and close above and below a specific level. Another important characteristic of supply and demand zones is that we have quite a significant price action pattern that takes place only around these major levels. So if you can see here, price came up around 2008 and hit this level and then had a massive reaction off of it. But then after the 2008 crash and at the beginning of the next bull market, price steadily made its way back up to this zone, had another very small reaction off of it, and then price shot and broke above this level. Price then continued to stay above this level for actually a number of years before having another massive momentum push up in 2016. And so the way that we validated that this was a major level of supply and demand is the fact that price never actually broke back below this zone. So the fact that we did have a clean break, close, and then a retest of the level, and then the continuation years later shows that this is our valid major supply and demand zone. So we did have the push up, the retest of it, and then eventually we had the second wave to push us up in terms of trend continuation. So now we're not fortune tellers and we will never know exactly when this continuation will take place, but what we can do is identify that there are things that are likely to happen around these major zones, and this price action pattern, the break, close, and retest, and then continuation pattern, is a specific pattern that does only occur around these major zones. And when we look at examples a little bit later, you will see exactly how this ties in to me identifying my major levels. So now that we've established that around this $105 to $120 level is our major weekly level, let's begin to identify a couple of other levels that I see here in this chart that I believe are major supply and demand zones. So the second level that is screaming at me is here around the $320 level to around the $300 level. I can even tighten up this zone a little bit just like this to make it around the $304 level, but I'm definitely seeing this as another major supply and demand zone. Now the reason for that is the fact that we did also have a lot of reactions off of this level, and the only reason that we crashed below this level was because of the lockdowns that started in March. And obviously that is a huge fundamental development, and so typically what we find is that we only get these massive breakdowns in price below these major levels during huge changes in fundamental developments, just like what we saw in March. So if it wasn't for the lockdowns in March, I do believe that Boeing would have held this level, but the fact that we broke down below it and fell to our next major supply and demand zone just goes to show how major the change in fundamentals were. So now that I have this next major level highlighted in my chart, I am expecting price to continue to push up, probably with some pullbacks in between, and eventually hit this level where I do expect to get another major reaction off of the level. Just because we have specified that when price doesn't reach these major levels, there is typically a huge reaction from it. Now that doesn't prevent price from eventually breaking above this level, retesting it, and then going up even higher. But typically speaking, there is usually some major correction that does happen at these key levels. The next level that I can identify in my chart is slightly above that and is here around the $365 level to around the $380 level. And the reason that I have this in my chart is because similarly, we had price react at this level multiple times. We even had a false breakout, and immediately after having the fake out, price broke back below this zone, retested it here, and then continued back down to our next major level. So just as I identified earlier, this is the major price action pattern that I look for price to do around these key levels. And the fact that this fake out occurred and then we broke back below and retested this zone just validates to me the fact that this is a key supply and demand zone on the weekly chart. Now that we've covered the basics of identifying key support and resistance levels and supply and demand zones, I'm going to go ahead and analyze a few stock charts just so that we can apply the principles that we've learned. So now I'm taking a look at the Apple chart on the weekly time frame, and I'm going to be putting in the key levels that I'm looking at in terms of supply and demand. So obviously the first one that screams right out at me is this right here, as we do have that classic price action pattern of a huge rejection, a break above, a close, and then an eventual retest of that level followed by price continuation. So I will be highlighting around here this $55 level as my key supply and demand zone here in Apple. So the fact that this retest occurred when price finally crashed during the start of the lockdown and the major stock market crash back in March, price was still able to respect this $55 level even though the massive change in fundamentals occurred at that point in time. So if price was to, for some strange reason, fall all the way back down to this $55 to $60 level, I would be looking for buy opportunities in this stock because Apple is such a strong company. However, I don't think that we will be seeing this price level for a very long time just because of the way the market's going right now. However, we can still identify this as a major supply and demand zone that does exist in the Apple chart. So moving on to the next zone in Apple, I am going to put this zone here as a major supply and demand level of around here, the $80 to $85 level. Now the reason that I have this level in the chart is the fact that we did have this huge reaction off of this level at the start of the March crash. So even though price for Apple is trading up here, personally I am looking at some point in time the price of Apple to fall all the way down to this valuation. But I am expecting a bounce from this level. So whether this crash happens within the next 2 weeks, the next 2 years, or the next 10 years, this would be a key zone that I am looking at when stocks have another major pullback. So definitely something to keep in mind when trading this stock. Another level that I will put in is at the bottom of these wicks here, just because I can see that price has respected this level on multiple occasions. But for now, these are my major supply and demand zones that I can see even in this massive bull trend for Apple. So I hope that you guys are understanding a little bit more how to identify these key levels of supply and demand. Now moving across to Europe and taking a look at Volkswagen, we can see that there's a lot more interesting price action going on in this stock. So the way I would break down this stock is the exact same way that we broke down our other stocks, in the fact that we're still looking for those break, close, and retest price action patterns. So one of the major things that I've noticed here is that we had a major break, close, and retest with the continuation here in around the 2009 to 2013 period. So the first zone that I'm going to be drawing in is here around the 100 euro to the 110 euro level. So as you can see that even during the March crash, price respected this level, and I can even adjust it a little bit more now to improve the accuracy of the level, because I can see the candle bodies a little bit better now, and we can see that this is a level that price did respect over time. Now we do have a few candle bodies and wicks above the zone, and the way that I would blur this out a little bit is just to increase the width of my zone. Now this doesn't really affect anything too much in the chart. All it shows is that we have a wide supply and demand zone and that a lot can happen within this area. But the fundamentals still stay the same, and we are looking for a clean break and price to stay up here for a while, a retest of the level, and then the continuation after we have confirmed that we have broken that resistance turn support. Now looking at the other smaller areas that may exist in this area, I can identify another one occurring here in this area right here. And I'm going to show you exactly why I've identified this smaller area as a key supply and demand zone here on the weekly chart. So the first thing that stands out to me is the fact that we had this reaction here around 2015. Additionally, we had a massive reaction here in 2017, and then even though price broke above it, it did have another reaction here before breaking back below, and then we had some range bound price action. And currently price is trading back up against this zone. So I do have this supply and demand zone here in my chart. Now if I drag this a little bit further, you'll begin to see the picture that I was trying to build a little bit earlier. And that's the fact that we do have quite a clear break, close and retest of this zone right here back in around 2012 to 2013. So even though I identified this level in recent price action, when we do drag the zone backwards, we can see that it also has significance beyond the areas that we were analyzing. So I did adjust this zone just so that it encompasses a little bit more of price that we had identified as being key reactions against the zone. However, the fundamentals do stay the same. So overall, looking at Volkswagen, either one or two things can happen from this level that we're at. The assumption is that we will have a reaction for price action to continue downwards. However, if we do have a break above this zone, it closes and stays above here for a while, retest the zone, then we could be looking at reaching even higher pinnacles in Volkswagen. So I hope that you guys understand support and resistance levels and supply and demand zones even better now that I've done a video on it. If there are any other stocks, currencies, cryptocurrencies or anything that you would like me to perform technical analysis on, including drawing in key levels of supply and demand, then just leave a comment below and I will definitely get back to you with a response and probably another video. So with that being said, thank you to all who took the time out to watch the video, and an even bigger thank you to those who made it to the end of this video, because I know that it's quite long. I recognize the need to cover some content for you guys who are starting out in the financial markets. As mentioned many times in this video, I will be doing a number of additional videos covering even more concepts related to trading in the markets. This will be useful for anyone looking to begin trading, but in particular, it will be useful for those who like my trading style. Also remember, I post frequently, so subscribe to my channel so you can keep up to date with the content that I post. If you found the video useful, support us by dropping a like on the video so that the YouTube algorithm helps us reach more people. Thanks and peace out.